Mark your calendars for Wednesday, July the 19th. At 7 a.m. UK time, much awaited UK inflation data will be revealed. Now, anticipations suggest that the headline figure is going to drop from 8.7 down to 8.2%. However, the core reading is expected to stay stickier at 7.1%, aligning with the prior reading of 7.1%. Now, investors in the UK, particularly pound traders, are going to be very carefully watching this release to see how the UK is doing in its inflation battle. With the core inflation still 3 times above the Bank of England's 2% target, there is significant work ahead. And should the core reading dip below 6.6%, then you could potentially see some rapid pound selling. Now, the pound yen in particular looks vulnerable to falls, particularly if the UK inflation level starts to fall, and that will mean the Bank of England has to do less in terms of interest rate hikes, and so that could see some of the recent pound strength unwind. Also note the seasonal pound yen bias to the downside. Over the last 15 years, the pound yen has fallen 80% of the time between the 17th of July and the 26th of August, for an average return of 1.61% to the downside. The maximum fall has been over 5% here in 2008, and the maximum fall within the seasonal pattern has been over 7% here in 2016. So, will the pound yen fall again this year between July the 17th and August 26th? Major trade risks. All outlooks have risks, and this is no exception. Remember that previous seasonal patterns do not necessarily play out every year, and don't forget that Bank of Japan policy will also impact this outlook as well as the UK inflation print. What we spoke about in this video is a risk event analysis surrounding the upcoming risk event outlined in this video. We want to put seasonals, fundamentals, and technicals all together for a great trade. We have the latest high probability swing trade ready for you right now to grab. If you just click below this video, we'll send it to you straight away.